So once again, thank you very much for joining us today. My name is Rebecca Sinai. I'm a project manager at Steinbeis Europa Zentrum, and I am representing the Every1 project. I'm lead dissemination and communication activities. Unfortunately, our coordinator, Mathilde from Flex 50, could not make it today. So I will be presenting the project on her behalf. We also have Camila Newman here from Every1, who will be presenting some of our research. And from the SHERLOCK project, we have Evie from 3 o'clock, who's a communications manager there, and also leads dissemination and communication activities for the project, as well as our speaker Pablo from Kura, a project manager who will be also presenting his research. So I think we can get started. So I'll first do a quick presentation of Every1 to introduce our project. After today's presentations, we'll leave about 15 minutes or so for a Q&A discussion. If you have any questions during our speakers' presentations, of course, you can write them in the chat, or you can wait until our Q&A session after they present. Also, a quick reminder to please keep yourself muted during the presentations. And yes, if you have a question, you can use the raise hand feature. Since, yeah, there are a number of us here today, but hopefully, yes, if you have a chance to, a desire to speak, you will have the chance. So first, I'll present Every1. So Every1 is our Horizon Europe CSA project about empowering everyone's engagement in energy and supporting everyone in the energy transition, and specifically the digital energy transition. So the digitalization of energy systems will result in the increased uptake of information and communication technologies in the energy system, things like smart meters, electrical vehicles, smart apps, and technologies. Sorry, we still have some folks joining. So, and we received funding in November 2022 through the Horizon Europe Program for Research Innovation, and our project runs until April 2026. We're a consortium of 11 partners representing different research and academic institutions, as well as some organizations in the private sector. All throughout Europe, we have partners from, I believe, 9 different European countries. And we have a multifold approach. So firstly, we are developing learning pathways based on knowledge gap analyses and producing capacity building material to support stakeholders in the digitalization of the energy system. So it sounds a bit like a mouthful, but I'll sort of dissect some of these in the next slides. And we are also creating a network to exchange best practices, discourse, and communication material among policymakers and energy regulators. So how do we offer this? Firstly, we create networking opportunities with other stakeholders in the energy transition. We are also developing tailored learning materials about digitalization and energy, and supporting stakeholders with specific needs and outreach. So for our networking opportunities, there are a few opportunities there. We develop 3 monthly activities with energy communities and other stakeholders throughout Europe. These could be webinars, but also networking at EU and regional events, and dealing with questions about how to foster learning in the region, how to deal with the digitalization of energy, and social aspects of digitalization, sharing our experiences. And then we also look to match solution seekers with what we call solution providers or market partners. And this depends on everyone's needs and availability. And then we develop tailored learning materials. So these are what we call our capacity building materials. So these are really geared towards energy community members, energy community coordinators, but could also be for local authorities, for cluster organizations, for the general public, etc. And we offer both technical oriented learning materials, but also socially oriented learning materials to support both members and the general public in the digital energy transition. And these learning materials take the form of online courses, videos, webinars, as well as offline materials such as informational booklets and case study guides. And we use a co-creation process with our energy community members, as well as other local authorities and cluster organizations, to ensure that the learning materials we develop suit the local needs of different communities. And so we are about to launch our first proposed set of digital courses or online courses under Digital Energy Essentials, which will be hosted on the Open University's platform. Open University is one of our partners based in the UK. And these are go from quite general to more specific. So topics just like what is a digital energy transition, why digitize energy, all the way to a deeper dive into energy communities and energy information and critical literacy. And these materials can be mixed and matched to personal interests of both our networking partners as well as to the general public. And we are developing at least 6 or 7 sets of learning materials. So, and then as far as our networking opportunities in Every1, there are different aspects we focus on. We have an ecosystem network which supports energy communities, local authorities, and clusters in the energy transition and digitalization. We've already had 25 ecosystems commit, representing 13 EU countries. Then we also have a market enablers network. So these are these solution providers that I mentioned just earlier. And already we have 11 market enabler partners, and this is still growing. And this really focuses on facilitating collaboration among DSOs, regulators, and policymakers across 27 EU member states to develop best practices and pilot projects for a flexible energy market. So we also conduct regular online sessions in cooperation with these key organizations, aiming to foster communication, promote market opportunities, and also create outreach materials to drive engagement within relevant sectors. So that concludes my presentation for today. Of course, if anything is unclear, you have questions, please feel free to reach out. And then I will hand it over to Evie to present SHERLOCK.
Thank you. Thank you very much. I'm going to share shortly my presentation. So I will put it in presentation mode. Well, thank you very much, Rebecca. My name is Evdokia Bayraba, and I'm here to present SHERLOCK project. And my role in this project is dissemination communication. I'm leading the dissemination communication activities, and I'm here today together with my colleague Pablo in order to represent the project and tell you what we are doing and how we are contributing as a project in this energy transition. Some short information concerning the project. The acronym is supporting the energy transition of the building stock. So this is SHERLOCK. We are funded under the Erasmus Plus program. The coordinating institution is the University of Genoa. And we started in the 1st of September 2023, and we are lasting until 2026 August. So we are more or less in the halfway of our project. So specifically in January, February, I think we will reach the 18 month. So halfway, and we are already having some results. And this I will present you later. We are quite diverse consortium, as you can see, from universities, research institutions, energy organizations, private companies, financial companies, and of course companies like 3 o'clock. And we are all committed to deliver these training courses to the experts in the energy building sector. So what is the main problem and why we are here? As you may know, that the building sector accounts for 40% of the EU primary energy consumption, and it is contributing quite a lot, 35% in the carbon emissions. So, and the European Union has identified this problem. And since there is a problem, it has to happen, we need to have a solution. We need, as community and as a union, to reach all these global goals by 2030, but also 2050. And for this, we need skilled workforce. So it has been identified that there is a mismatch, a gap between financial people, financial experts, and technical people who are working in the energy and building sector. Somehow these two target audience do not understand the need of each other. So there is a lack of investment in the energy renovation, energy efficiency sector. So while we are here, SHERLOCK aims to develop a set of green and digital skills for the professionals in the financial sector, but also for the technicians who are actually engaging in the energy efficiency investments. And how we are aiming to do this, we have identified 3 ways in order to equip these target groups in order to perform better their work and communicate better and understanding their needs. So we have created the Pan-European Knowledge Center, which is a kind of hub, an online hub, but also can be also an actual hub between universities, businesses, and other stakeholders, for instance, policymakers and technicians, who can meet and they can exchange information about their needs. They can meet in the events that we are organizing at SHERLOCK, but also beyond that. And we are trying to maintain this hub throughout the project, but also beyond. We are currently developing the MicroMaster programs. These are innovative educational programs for experts in the energy construction sector, but also in the financial sector. And we have also the VET courses to upskill technicians such as builders and installers with knowledge about finances, environmental, and other issues. Why we have selected the micro-credential as a tool is actually because micro-credentials they address very specific needs, and they are very niche. So we already know that there is a need for that, and we develop this micro-credential to satisfy this specific need in order to develop, of course, capacity. They are if you all together, they count as a full course, as a degree. So it's very practical. You can attend these courses wherever you want. So there is a lot of flexibility. It doesn't take too much time. So it's very short term, and there is no cost, basically. So what are the Sherlock micro courses? We have in total 15 micro courses, and we are covering, as I mentioned, mixed topics for both target groups, those in the energy retrofitting sector, but also financial sector. There are courses only for one specific target group, but also there are mixed topics. I put here some of the topics: energy efficiency, natural materials, green infrastructure and finance, circular economy, data analytics, communication, policy analysis, and everything. So all of them are now have been developed. So we are now uploading them on the system. So we are very confident that we will fulfill the expectations, and by February they will be all online, and we can start having people registering and attending the courses. Besides the master programs, we have also launched a very short info course. This is for the general audience, because we don't necessarily know what it means to be in energy efficiency, how you can support the energy transition as an individual, what solutions you have, financial or other solutions, to upgrade your home to become energy efficient. So we have developed one video, but we have also break it in 3 small videos for better for higher usability, to raise awareness about these topics and inform the general public. So how you can engage with us? You can become member of our knowledge center. What I haven't mentioned is that our knowledge centers are also by country. So if you are belong in one of the countries that we have, the national knowledge center, you can register, but you can become part of the European knowledge center. And here you can scan the QR code, and you will be part of our community. You can follow us on LinkedIn, and there you can get all the updates about our courses and any other events we are organizing. We will be very happy to have you with us. And thank you very much for your time. You can find my information here if you have any questions. I'm also staying here in this webinar, but if you want to write me, I'm happy to respond to your questions. Thank you. And I'm giving now the floor to Pablo to continue with Sherlock.
Thank you, Evie. Let me just share my screen. Okay, can you see my screen?
Yes.
Perfect, thank you. So I'm Pablo Baigoria. I'm a project manager at Creara. As previously Rebecca told, we are energy efficiency consultancy company. And in the past 2 years, we have developed several projects related to energy efficiency, renovation of buildings, especially in the European projects area. We have participated in projects like Renovation, AAA, Quality. So a lot of Horizon 2020 projects related to energy renovation of buildings. And also we have helped private companies enter the energy renovation of buildings market, especially large building materials companies that wanted to enter this market for in a Spanish context. But we have also analyzed the more broader European context for the European consumer organization. So based on all these projects, I will present today some results, of course, very briefly, but I hope it is interesting to you. So let's set some context. As Evie introduced, there is not enough investment to achieve the goals for climate neutrality in 2050. The BPIE has made an analysis, and they have retrieved the ideal path of financing to achieve climate neutrality 2050, and they have analyzed the real numbers that have been achieved. And as you can see, there is a almost 41% shortfall in covering the investment needs. So the European Commission, the European authorities have already told that there is not enough public funds for the energy transition to happen. So we need to find a way to unlock the private investments. In fact, the Spanish National Energy and Climate Plan for 2023-2030 shows that 82% of all the investment is expected to come from the private sector. So we need to find new business models that will allow us to achieve these targets. So why we are not achieving these figures? We have figured that there are three main barriers that kept, especially from residential consumers. Of course, each economic sector had its own barriers. Here, I would talk more about households. We have found that there are high upfront costs. Just to give a lot more context, and deep energy renovation costs as much as a new car. So many people cannot afford, don't have the necessary funds to support such renovation, or even if they have the necessary money, they don't see the energy renovation of their building as an important matter. And as we have realized, if people have, let's say, 40,000 euros, they would rather buy a car than renovate their building, even if renovation is an investment and can give economic profitability in the future, and a car is an expense. Then we have lack of trust. So as there is a lot of misunderstandings and lack of knowledge in the consumers about the energy renovation measures, there are times where a measure is both technically and economically viable, but they don't want to tackle it. They don't want to install, for example, solar panels because they fear that the roof will be broken, or they don't want to install a heat pump because they don't want to have a full refurbishment of the pipes, even though in most cases it's not required or necessary. And then we go to the long payback period. Of course, measures in households, in buildings, have a long payback period. The most optimistic scenario, a heat pump, has 8 years of payback. And if we move to the building envelope, to the walls, then we have to wait for 20 years to have the payback. And many people don't have so much time to wait for a payback. So there are some new business models that are especially prioritized in the recently adopted APBD. So here we talk about on-bill and on-tax schemes, energy performance contracting, and green debt that englobes green mortgages, loans, and bonds. So on-bill and on-tax schemes are very similar. Here we have a mediator, a middleman, that can be the utility, then it's an on-bill, or a municipality, then it's an on-tax scheme. Here the idea is that the lender will provide funds to the middleman that can lower the risk of non-payment. If we lower the risk, we can lower the financial cost of the loan, and then the consumer will pay back the lended money to this middleman. So the idea here is to have a very trusted middleman in order to reduce the risk of non-payment. And as the consumers, in case there's a utility, the consumers ideally will pay they will repay the loan through their energy bills. And if it's a municipality, through local taxes. As energy bills and local taxes are highly protected by law, there are very low risk of non-payment. So again, here the goal is to reduce as much as possible the interest that the lender wants to cover the risk. Then we move to energy performance contracting. Here we have an one-stop shop, an ESCO, an energy service company. So this company is supposed to be able to provide both technical guidance and financial guidance. So in some cases, an ESCO can even finance themselves the measures, the energy efficiency measures. And the idea here is that the repayment is made through the achieved savings. So if the measure installed can save for the customer 100 euros a month, then the consumer will only repay 100 euros a month. The idea here is that the consumer will not even notice that they are repaying something. They will just pay the same amount they were used to, and after the whole loan is repaid, then they will gather the benefits of the investment. And then we move to green debt. Here, the idea is that the lenders will realize that energy efficient investments can provide higher profitability for them than usual investments, and they will proactively lower their interest rates. And through this way, they will foster the energy renovation buildings. So just to finish, let's see a little bit more in depth each of these schemes. So on-bill and on-tax schemes are seen to be the best ones for the residential consumers because the consumer can sign a contract with a trusted party, a company they trust, an energy utility or municipality. However, this requires a specific regulation, national laws that need to be changed in order to allow, for example, municipalities to take loans. It's not the case for every European country. Then, energy performance contracting is also a very good way for residential consumers. However, these ESCO companies are mostly interested in industrial and tertiary buildings because they can achieve their higher profitability because the achieved savings are greater. So, for example, if a single house, you can implement a heat pump and get a reduction of 20 euros per month. 20 euros per month is not sufficient to give profitability for a private company. So energy performance contracting is only viable if there is a huge agglomeration of households, for example, a block of flats. And then we end with the green debt, even though the idea that the lenders will reduce their interests because they see an energy renovation is a pretty idea. However, a recent poll published by the European Banking Authority show us that most of the lenders think that green debt will be more expensive in the beginning for the upfront costs than expected. So they expect that energy renovation lending will be more expensive. So we can expect that the interest, instead of being lower, will be higher. So thank you for your attention. If you have any question, feel free to ask. And now I think I give the floor to Camila.
Thank you, Pablo. I will share my screen. You should be able to see my presentation now, right?
You can see it, but you may want to, yes, now it's in presenter mode.
Perfect. Okay, so I will present now part of the work done in Every1, where we assessed the adoption rate of different energy services and wanted to check what are the reasons for some services to not be adopted and for others to be widely adopted. And to do so, we identified 39 digital services and products that either currently play or are expected to play a key role in the digitalization of the energy sector. We divided those services into 3 subsectors that were buildings, mobility, and industrial processes. And for today's presentation, I will focus on the subsector of buildings. So in the building subsector, we identified 15 services. I'm not going to explain all of them, but maybe just as a short indication of what those services mean. The first one, for example, remote consumption communication, simply means that through smart meters, people are now able to kind of track their consumption, and DSOs are able to do the billing easier. Or load optimization means that now end users are able to shift their load according to, for example, price signals. So after we identified those services, we knew that we had a certain input and we kind of knew what the output were. However, we did not really know how to get there. So we applied the fuzzy logic approach. How does this approach work? So basically, we conducted some expert interviews where we asked them what do they think is the rate of adoption, and we kind of assessed in how many countries we think the certain services can be adopted according to the technology standards in place. And then we kind of fed all that into this fuzzy logic approach. And then as an output, we got a certain adoption level. We did that for the adoption, but also for the maturity of the services, meaning how mature is a certain service? Is the technology already well developed or not? And then through this method, we get certain numbers for the adoption level for each service and for the maturity level of each service. And this is shown here for some of the services in the building sectors. So what we see in the first column is how the expert ranked the specific service, in how many countries we think that this service can be adopted. And then on the right, we see the outcome of the fuzzy logic approach. And on the right side, in the right table, we did the same for the maturity of each service. So we assessed the technology readiness level for each technology that is needed for the service to take place. And we assessed the compliance to regulation. And based on this, also through the fuzzy logic approach, we got a certain number regarding the maturity level. And what we now were
Looks like you're yeah, you're muted, Camila.
okay, can you hear me now? Oh, perfect. Okay, so then we were wondering, how does adoption and maturity correlate? So it would make sense that services that are more mature are also more adopted. And if this is not the case, what are barriers in place? And is one barrier maybe financing? Is it a negative cost-benefit relation? So we mapped the different services. And what we saw is that for most of the services, there's a clear correlation between the maturity and the adoption. However, there are several outliers that do not really fit this hypothesis, meaning that they have quite a high maturity, which we see in this left-hand corner of the diagram. They have a high maturity, however, they are not being adopted. And then we have one service, which is service 4, that is quite highly adopted, however, does not have a high maturity. So I think these were the services that we were most interested in, because there must be certain barriers in place that hinder the wider adoption of these services. Maybe just a quick introduction to each one of them. So remote consumption communication, as mentioned before, this mostly relates to everything that is enabled with smart meters. Then we have consumption and emission tracking, which is the one service that is already widely adopted, however, not very mature. And this simply means that there's a digital interface allowing end consumers to track their consumption and emission. Then we have load disaggregation and flexibility availability monitoring. This simply means that building owners or end consumers are able to use the flexibility in order to shift it according either to price signals or PV production. Then we have energy home domotics, which refers to automated energy services, so smart plugs and stuff like that. And then as a last service, we have battery charge and discharge arbitrage system, which means charging the battery when prices are low and discharging them when prices are high. So for these 5 services, we wanted to know, is there a positive economic feasibility given? Or could this be the barrier in place for them not being adopted? So we conducted a cost-benefit analysis, which is shown here. So we calculated the internal rate of return. And what we see is that there are 2 services, energy home domotics and load disaggregation, that actually have a high internal rate of return, but are not adopted. Therefore, we would argue that there must be other barriers in place. On the other side, as we saw before, consumption and emission tracking is already widely adopted, even though it's not a very mature service. And we see that the internal rate of return is negative, which is also a bit unclear then why this service is already so adopted. However, this cost-benefit analysis is only a screenshot of one specific use case. So to kind of make it more understandable, we conducted a sensitivity analysis where we calculated the chances of it becoming a positive internal rate of return once the conditions change a little bit. And what we see is that then for 3 services, it could become positive. So for the last 3, for the first 2, it's very unlikely that they will ever, or at the moment, achieve a positive internal rate of return. Another thing that we looked at is which elements are the elements that have the most impact on the internal rate of return. And what we found is that this is mostly linked to the revenues. Therefore, we could argue that the revenues are simply at the moment not clear, or that regulation is still changing, and therefore there's a lot of risk related to the revenues. And this basically leads to my summary, which is that benefits need to be evident to overcome barriers. And while we have identified several services that have a high maturity but low adoption rate in the building sector, some can be explained by a low economic feasibility. However, others cannot, and therefore there must be other barriers in place, such as social or regulatory ones. For the ones where the economic feasibility is quite low, subsidies or financing support could overcome these barriers. And this is another point that we found as part of the Every1 project in general, is that financing is a key theme for digital inclusion, meaning that there are, especially for low-income households, several challenges because they do not have the financial means to invest in such technologies or in these services, or they do not have the infrastructure, for example, no internet access to use such services. On the other hand, these services could really help low-income households by reducing, for example, their energy costs. So I think one key takeaway that we found in the Every1 project is that once it comes to the design of financing schemes, for digital services, especially low-income households should also be included. And I think that's it from my side. I don't know if there are any questions.
I guess we can, open it up to discussion if any of our attendees have questions to ask, or presenters if you have questions to ask one another based on what was shown today.
If I may, start the conversation, because I think both here, both the speakers have somehow the conclusion is that financing is very important. Where to find the money to go through the energy transition? Because of course we can, I can say that it's important to have solar panels or we can invest in better quality of windows, and we can have heat pumps, but also we can say technology gives solutions. But it seems that all of them are quite expensive. And and there is a kind of and it can create a kind of social gap. So it means that customers with more money, they will have more let's say more advanced houses, energy efficient houses, and there's the low income customers that they will have to wait until the state maybe helps or provide solutions somehow. Have you seen any policy or maybe some governmental decision that includes also the digital solutions? Because, for instance, we have seen initiatives, for instance, for upgrading the houses, but the materials themselves. But about also the digital solutions, have you seen the state taking some initiative, providing some sort of financial contributions to the homeowners or renters? Not renters, it's another word, those who are renting the houses. It's just I'm also interested as a consumer. Have you seen any sort of initiative as such?
Not that I know of, but I think that's a very good point. And this should be highlighted maybe to policymakers that this is something there should be a focus on.
And one more question: have you seen some changes, perhaps, let's say, in because you have said that we also, Sherlock, we have done some certain of focus groups, and we have interviewed technical experts, also financial experts. That's why we identified the skill needs. But have you also identified some sort of problems, let's say, between the capacity, the financial capacity between the countries? So when you were interviewing people, did you see like residents from this specific country have more financial capacities than the other country, like some sort of kind of country based results?
Yeah, I think definitely. So regarding the adoption, once we assessed it with expert interviews, we tried to assess in how many countries we think this service could be implemented. And this is where this really fits in. So we kind of assessed which technologies are already in place in this country. And if the technologies are not in place, do we think that people have the financial means to install the technologies in order to make use of the service? So yes, we considered this.
Thank you.
I have a couple of questions. I work for a financial leasing company in Belgium. And being a leasing company, financial leasing, we are very much asset-based financing. And so one of the questions that I have, you mentioned a payback return of 8 to 20 years for the residential sector. We are B2B, so we work with companies like industrial mainly. Do you have any statistics there on the payback ratio? So we are looking at implementing new products, but of course we need to think about how we can finance it, over what kind of a term, and the conditions that we would need to ask from our clients. So anything you have in that area would certainly help.
Yeah, so we got that figure. We made interviews with companies that inside the 8 years figures is specific for heat pumps, because we talk with ISCO energy service companies dedicated to the residential market, and they told us that if they move farther away from the 8 years, like for example, they told the consumers that the payback will be 10 years, then the consumers, they won't accept it. They told us that they found out that The maximum amount of years for payback is 8 years. It also depends on the segment group that you are targeting. Of course, it's not the same to say 8 years or 10 years payback to young people, yeah, that they're, for example, it's their first own house, etc., or to an elderly couple. So this is also very, very important thing to have in mind.
Thank you. And also something else that we come up against, the owner of the building is not always the company that is actually exploiting the building. I mean, that has the business activity within the building. And so there we do have maybe a conflict of interest between the building owner having to make the expense and the company running the business who would potentially benefit from the energy savings. So that I think is a barrier that we are facing. And then also as a financial company where we are asset based, we have ownership of the assets. It's not the same as a bank that would be taking out guarantees and collateral. We really are owners of the installation from the beginning, which means that we need to have the possibility, if we run into financial difficulties with our customers, to be able to retrieve the asset. And that is what we do, for example, with solar panels. So we do have that ownership. We have a possibility to step in to the project. And I'm just wondering, with energy efficient mechanisms that are maybe more integrated into the building, and you mentioned heat pumps and pipes, for example, how easy is it to be able to, it's something that we need to consider and look into, to maybe at some point have to step into the project or retrieve the installation, especially if the company is not the owner of the building. So those are very fundamental questions that we are coming up against.
Yeah, I mean, if you are targeting industrial and tertiary consumers, clients, then what you can do is, for example, if you install a heat pump, you can sell the heat that the heat pump produces. The heat pump is yours, but you only sell the heat. It's the same. It's the same
Like
idea behind
panels.
owning the panels. Yeah, you sell the electricity. So for heat is the same. You sell the heat, but it's very difficult to do something like that in the residential area, because the residential consumer, they want to own the asset. They won't let you. I mean, for example, if you want to renovate the walls and you say, okay, I will renovate the walls for you, but for the duration of the loan, as long as you are paying me, your house is mine.
Yeah.
They won't go for that, because they see that as a mortgage. I mean, and a mortgage is already very bad. It has a very bad reputation. So it's more of a behavioralistic thing rather than rational economical finance optimization. But for commercial and industrial, I mean, we have seen that it's even the usual case for large, for example, heat pump implementation. Then the usual case is that the ESCO is the owner of the facility, and then when the contract ends, they sell the facility to the building owner for the residual value of it.
Okay, so it's like working with a third party financing company like we have for solar panels. It's pretty much the same kind of structure, I guess. And then I have one final question, which is with regards to what we call the residual value of installation. So at the end of the financing scheme, you know, we also have to be able to project a residual value onto installations. And to take a comparison with electric vehicles, it's very, very complicated because prices just go up and down regularly. And we find that the secondary market doesn't always follow necessarily, given the high prices of electric vehicles. And I'm also wondering for energy efficiency, because there are a lot of technological advances. And if the payback period is long, don't we risk also after 10 years, 15 years, maybe not having much of a high value on the assets? And I think those are elements that are also maybe not that financial institutions don't want to make the plunge into investing, but it's just not always very clear. And the customers are not always reaching out to us as well. So I think everybody's a little bit waiting on each side of the fence.
Yeah, that's really true. I mean, from the financial perspective, investment and renovation is a clearly risky investment. So even though the official communication from the European Commission and national, they want the lenders, the financial institutions to see the energy renovation, as a very safe investment, it's not. And there is no study that can prove that it's a safe investment, because as you say, the energy price fluctuation, its volatility now, it can make, for example, a year ago, solar panels were the most profitable investment possible, and now they are not. They are even they can sometimes they cannot even make it even. It's very difficult for them now to be profitable. The same for batteries. A year ago, it was more profitable to have batteries than now because of the arbitrage possibilities. Sorry. However, from the consumer side, there's not enough awareness. I mean, if you gave the 40,000 euros that a person needs to renovate the building, they will use the last thing they will think about is to renovate the building. So as you say, there is this issue that the lenders want to go after the consumers, and the consumers want to go after the lenders. So here there is the need to fight or to work on the two sides. So awareness for the consumers and stabilizing the market, giving some regulatory assurance to the financiers, to the lenders, in order to be able to project in, for example, for 20 years, a cash flow.
Yeah. Okay. Thank you very much.
Also, if you have any other question, you can mail me, Kim. I think
Okay,
you have
thank you.
It was my email. I will send you my email chat. So
I made a note of it. Yes, thank you very much.
perfect.
If there are no other questions for now, I think we can wrap up this webinar right on time. I just want to thank the speakers once again, and for all of you who tuned in today to listen. It was great to see you all, and enjoyed the discussions that came afterwards. So yes, please feel free to reach out to any of us from SHERLOCK and from Every1. We look forward to continuing these conversations. And
I have one little
yes.
question, Rebecca. Sorry, but will you be sending the presentations out? The slides of the presentation?
We didn't have the slides planned. We did plan to share the recording of the webinar, but we could also share those as well if you'd like.
Oh, the recording's fine also. It's just
okay.
There were some interesting statistics. Okay, thank you very much.
Great. All right, well, have a lovely morning and the rest of your week, and hope to see some of you again soon.
Thank you. Bye-bye.
Thank you.
Bye.
Bye-bye.
Thank you. Bye.
Bye.